Welcome everyone to this beautiful webinar on future of banking and digital impact. Today we have here Mr. Murli, who is a senior president and country head branch banking and liabilities, product, wealth and digital banking and marketing at Equitas Small Finance Bank Limited. Mr. Murli is a strategic bank leader with over 20 years of success in setting up branches, business verticals, and driving products, innovation, and profitability. Prior to joining Equitas Small Finance Bank, he worked with Kotak Mahindra Bank, ICICI Bank, and Citigroup. Mr. Murli is known for being both people and process-driven person with a sound understanding of Indian finance retail market by designing customer-centered products, analysis, market trends, limiting expenses, and identifying areas of opportunity. He has completed general management program from IIM Ahmedabad and a certified professional in investment, compliance, and operations from AML and finance management. I welcome Mr. Murli here. Over to you, sir.
Thank you, Rachna, for the nice introduction. It was very nice, very crisp too. Good afternoon to all the fellow colleagues and the participants, and our most important thing, students, and our open channel viewers. Good. So, for the subject, which I don't know, I can go on for 2-3 hours, and this is a subject which feeds me. I think I can go for days together on discussing about this subject. But the most important part is let us, stick to our core timelines, which means 35 to 45 minutes. I'll talk about 35 minutes is enough, 40 minutes max, where we speak about what is money, what is banking, what was banking, and what will be banking in say next 30-35 minutes. And then let's open up the forum for some question answer so that all of us are interactive also. Otherwise, monologue, sometimes you get to a confused state of mind. With that note, once again, good afternoon. Before I get into what is banking and what is the future of banking, let us do a time travel. Let's slightly go back. Let's understand why a bank is needed. Actually, fundamental thing is, what is money? That by itself is the fundamental foundation, I can say, on which every other aspects of financial transactions, banking, intermediaries, multiple banking intermediaries, everything pledge on. So fundamentally, let's talk about money. What is money in our mind? Why was money created? If you go back, we used to do a lot of hard labor at one point of time, and we used to make some living, and we used to get gratified in form of either being given a food plus shelter, or food plus shelter plus clothing. This is how the system was working. So there was no storage value of time. That was available, that is available, that will be available. Whether we like it, want it or not, all of us are perishable, and all of us are mortals. So this being the reality, how to preserve the time value of an act was the biggest concept which was running, say 600 BC. This money as a concept or currency as a concept was 600 BC a phenomena. So then they decided if somebody does anything or somebody wants to transact, there should be a tool which actually measures to the unit A and guarantees that unit value B, and C can be used for transactory purposes in today's language. So that was the time currency was born. We are talking about 600 BC. When currency was born, like in every other society and every other phase of time, that was a phase of time where people used to work hard. People used to be paid on skill basis, less of knowledge basis, mostly on skill basis. So they used to accumulate money, and then there was a place which was needed to A, store the money, B, put it into deployment. So these were the two things. So interest is a very late concept. So there was a system where you can go back to Vedas. So Vedas talks about a system where central treasurer takes the money, keeps it with him, deploys it for other purposes, and given on time of need or on demand, or when you become old, it becomes a safeguard. So this is how what happened. First money got created, then a system to store the value. So there was no interest, nothing. It's a different syndrome later what it happened. And proportionately what happened in human life was a big transformation. Finally someone could say that save for the future. It started as back as 600 BC, as back as Vedas time, where this concept of money evolved and storage of money evolved. And this is how, if you see even today, people say that, make money when the hay shines, which means at the younger age, all of us or all of you are expected to make more and more money out of being more and more productivity. And today the banking evolved in different way. We will enter into it. So this was running for generations, centuries. Now if I talk about 600 BCs and Vedas, and then if you talk about multiple kingdom, dynasty, emperors, colonial rule, it just survived. Now let's get back to our core subject, banking. In India, the first bank ever that got introduced or launched was in 1770. It's called Bank of Hindustan. So this was the first official bank in India. We are talking about 1770. So which means we are talking about close to 250 years. And 250 years, I think this is the oldest industry at this point of time in India. And I'm sure before that also it survived. But a formalized bank, when you call it a bank, then what happens is people accept deposits and then give it to loan, and they make differential money and they pay you interest. So it's a different ball game. So 1770 was what. So from 1770, it started evolving in multiple phases. Then Britishers came in 1800. Then for their international trade, for what they came in, they could create three banks. I think Bank of Calcutta, Bank of Bombay, and Bank of Madras became first three banks, and then they came together. It became a imperial bank, and then that's how one centralized institution came up. I think that imperial bank also had little bit of State Bank of India. State Bank, while got created some 65, 66, 67 years back, but officially it started taking the formation of Imperial Bank of India. This is what is banking evolution in India. So we are not new to money. We are not new to bank. We are not new to actually allowing money to appreciate or putting money to deployment. So as a human race, if you ask each one of you into your instinctive way, all of us know how to make, how to spend, and how to save money. Now, are we doing it in the right proportion, wrong proportion? That's a different issue. But we are actually naturally not given, but over a period of time, through our generations after generations, through the bloodline, I think slowly it will become a DNA soon, money parameter. So this is what happened during English time. Then what happened? Independence happened. After our India got independence, the systems were continuing, but there was a problem brewing that far and few banks. In fact, pre-independence, if you go back and see, we had during colonial time close to 600 banks got registered. Many got integrated, many failed, many got absorbed. So those things were happening. And then post-independence, there was a priority for us to uplift the mass population which was surviving on semi-urban and rural India. When banks were on the private mode, they couldn't achieve it, so they went into a nationalization. So this is, I think, somewhere happened in 1969, first phase of nationalization, which means few of the private banks which were doing very well were nationalized and given the key objective. What were the key objectives? Objectives were very simple. How do you uplift the poor person? How will you get the priority sector? At that point of time, agriculture was our main, and even today, and it will be. So how will we get the agricultural part of the economy in terms of all three, land, cattle, and other forms of dairy farming also came in, then poultry farming. So everything was getting on the developed stage. So one of the key priorities was, how do I get the rural penetration? So 1969 was a turning point. Then second set of nationalization happened in 1980. Another 7 more banks, and we were running. So which means there is a pre-colonial era, colonial era, and post-independence era. But as we are moving ahead, there was one biggest problem that was coming into the picture. That was the reach was not happening in the way we planned. Reach was happening in the way banks wanted to happen. Business was formulated and regulated. So 1990s came where we went into something called liberalization. And I think that's not only a tipping point for banking industry. That's the tipping point for Indian economy. Having worked from seen those eras to now, I could see a tangible difference of technology, of digitization, of automation. So we will touch all these things as we sail along. So when 1990s liberalization happened, the markets opened up. When the markets opened up, you had a fleet of private banks. That was the era of private banks. I think 8, 9, 10 private banks got created over a period between 1990s and early 2000. Now you have a private banks, PSB, and then I'm not going to touch into deeper into RRBs, UCBs. Then it gets into a different discussion. Let's confine it. So liberalization helped us to privatize the banking industry, and one of the core expectation out of privatization is how will we build efficiency into the system? How do we automate the system? So we were used to a system where everything was manual. In fact, to an extent that I have seen banks, I'm sure all of you, when you walk in to open an account, you need someone to give you a reference. As simple as that. Unless you don't know anyone, you can't open an account. That was the era, which was not some long time back. It was 1980s was like that. Then to get a check is a big thing. Then to get a checkbook. Then to get the check cleared. So there was it wasn't. So the main intent between liberalization was how do we automate the process? Then how do we get a core banking system where in one system people can see? Then how do we increase the efficiency and productivity of the banks? And most importantly, in all these parameters, banks or consumer is a byproduct when it comes to money. So these were the 5 critical things. So private banks were created as an example. The biggest advantage of bringing in private banks, that was the time retail boom started happening. For a simple reason, markets opened up. When capital markets opened up, you got a lot of FII and FDI. FII came in, foreign banks started setting up, people started learning from foreign bank. And if you see the late 90s, that was the first time ever India got something called credit card, or early 90s. Till then, we never had a credit card. So first card plastic ever issued was credit card. Then what happened? All these private banks came in. We had one revolution that started slowly happening, which is called a debit card, which means people started getting debit card, and to back that, you had a few ATMs here and there, which means people can go withdraw money at 24/7. That was a big thing, very, very big thing. In fact, people used to crowd or throng private banks, and public sector banks also started issuing. So people started thronging the banking industry for the first time for an automation. So that is the first natural progress of plastics entering into money. That's where plastic economy, what we call now, started created in early 90s. And to complement that, we had ATM banking. Extension of ATM banking was first time a phone banking came into existence. And this ATM and phone banking at that point of time is the father and mother of creation, something called PIN banking. So for the first time, people started memorizing a set of numbers other than their date of birth, I can say. Till that point of time, as a tribe, we are not used to remembering. I am sure most of you will not remember your account number, but still you will remember your PIN number even today. That goodness came at that point of time. That is called the inflection point. And that was something, sorry, yes, some call, I'll just put it on mute. That was the inflection point of PIN banking. Then as PIN banking, ATM was gaining momentum, as the next stage of phone banking getting momentum, early 2000s, that was the time internet banking, or what we call, desktop banking came into existence, which means there is one more leg added as a convenience, as a technology. So suddenly, non-educated people could able to do, who owns a desktop at the home or who has a desktop at the office, were able to do this so-called internet banking, which had a very limited feature. As it rolled on, private banks started getting efficiency, retail boom started happening, reach started expanding. So everything was going at a breakneck speed. I will not see, I will not say or see that at that point of time that we were growing slower. Of course, the velocity was better, but it was not enough to create a boom that what happened in last 10 years. So in last 10 years, what happened? Mobile banking as a concept, 10 to 12 years back, it was there. It was not able to take shape because of the technology constraint from the supply side, that was the manufacturer and the what to say, service provider. The entire inflection point was launch of smartphones. Smartphones actually redefined, and thanks to Android, iOS, everything you name, anything at this point of time, most of them are compatible with the technological need of the banking. That was one big threshold point where mobile became a contact center, mobile became a house of transaction point, mobile became the most preferable interactive point. Then banks started entering into mobile. Now that was very exciting. People were enjoying transactions through mobile, and everything was again sailing well. 2014, I think our present government came into limelight. They were controlling, governing, as always, very well. At that point of time, the next thing happened. That's demon. When demon happened, okay, where currencies were displaced, that too of higher denomination, everyone expected a catastrophe or a social breakdown or a societal breakdown, but it didn't happen, because the most important revolution by that time has happened in India. And I think many of us underestimate the Indian banking industry, what it is. I'll come to that. Indian banking industry is now way ahead of any European banking industry or American banking industry. Okay, let's be very, very clear. And the continuous R&D, what we have seen in our banks, we aped ATM from others. Now today we discuss about UPI, which many other countries doesn't even have at this point of time. When I say UPI, you have a wallet, you link it to your bank account, and you start freely trading with your merchant peer-to-peer. Suddenly the transaction has become seamless. On one side, Pradhan Mantri Yojana accounts were opening, so which means people were getting into the basket of financial inclusion. People were interacting with the society through the transaction. So it's becoming a seamless thing. Just to give you a figure, last full year, we did close to, say, 2.5 billion transaction last full year. This year, in first 2 months, I think we have done that figure. So that's the amount of penetration what we have through UPI, thanks to UPI. So UPI is the next leg. So these are all the front ends which banking actually started working. In between, at the mid office level, from books, they migrated to core banking system, and from core banking system now to advanced systems on AML, risk monitoring, NPA movement, financial control. Everything has got automated. And at the real backend, treasury again got automated. Treasury today, people are able to take spot decisions. People can do buy or sell bonds or securities based on the intelligence on a real-time basis. While these things are happening on the transaction side, while we talk about UPI as the advanced thing, in between RTGS, NEFT and IMPS, these are all three different segments of payment instrument. It is as good as low value, mid value, and high denomination notes, because most of you, that has started happening. So which means Indian industry on a nutshell mode in last 40 years, okay, exactly 40 years. If I take 81 to 2021, leaps and bounds. A, in terms of front end, B, in terms of mid office, and C. Now, all these things, while it's happening, the most important thing happened: how do we make more and more consumers to get in by using all these things? That's the another turning point. That's the U-turn which actually made this industry look like a cut above. That is getting new customers, getting transaction, getting payment. How do I leverage technology? Post demon, then RBI came out with a new set of regulations which were friendly, and through the wallet, people started opening bank accounts as half KYC account. That's another important thing. Okay, so now you have a bank within a bank. Now you have a fintech within a bank, and now for the first time you have created a fintech out of this digital revolution. So people started getting into opening accounts through using their Aadhaar based or eKYC or CKYC, whatever we want to call, and then fulfillment happening through video KYC, like this conference that's happening. I think that has brought in phenomenal velocity of people getting into the banking stream. People actually preferring one over the other based on the ability, pricing, and the product range, ability based on relationship management and everything. So it's became a comprehensive suite on digital. So extension of now digital has gone ahead. What is that? People have started doing digital lending. Now, how do they do digital lending? It's something now where the entire set of mid office and back office, everything is compressed in one form, which means the system takes care of identifying mass personification and creating and understanding the transaction pattern, understanding the CIBIL score, and giving you a loan instantly. So that's why if you see most of the banks have moved to half an hour loan, 2 minutes loan, 3 minutes loan, jaldi loan, bahut jaldi loan. All those things are happening in the market. Primary reason is there a new technology called artificial intelligence has come in, which means it's able to do predictive analysis, it's able to do understand you better, it can relate you to multiple personas, what they have consumed, and creating a personalized product with you. Put together in a nutshell, AI now feeds the business. AI decides the propensity. So that's the power of AI. So when this was happening, a lot of people have come in. Suddenly, you can't increase the staff. Now, how will you do the service and engagement? That's one another area. So now the traditional banking structure is continuing front, mid, back. In digital world, it is compressed into one. To service, it becomes a next leg where that's a very interesting point where bots have started taking over service or lower decision making process. In banking queries and banking service, 80% are repetitive by nature. Service expectations is same. How fast can it be done? That's the simplest thing what consumer has. So bots have taken over 80% of these lower decision making and most frequently interacted stuff. And at the back end, what happened was that is the operation center. There is something called RPA came in, which took care of 60% of the rudimentary or repetitive jobs which back end does. So suddenly you have a situation where you have an assisted model, which we keep calling in artificial intelligence as cobots, became real. On human assisted by a robot is called Kobo. So operations now, we can say in most of the banks, 45, 50, 60% of the operations, for example, renewal of TD, redemption of mutual funds, everything is done by cobot combination. And the service is done by artificial intelligence. Now, all these things has happened in front of our eyes. When these things were happening in last 2-3 years, I can say predominantly, the next stage of evolution of now banking, BFSI, banking financial sector is now got into a very good collaborative mode. Earlier, what you see as a competition now has become a collaboration where fintech companies have come in, which means a specific solution centric opportunity is created by this company, and that excellence is done by that company for consumer satisfaction. So banks started associating because now you digitize the product, you have digitized and automated the process, you have created bots for service. Now you need to expand the range, and so fintech partners came in. So these individual fintech partners have multiple strengths. Few of the partners you can stand up and say they are good in wealth management business. Some will say I'm good in distribution business. Some will say I'm good in loan. So they are looking for a banking partner because finally, whatever you do, you need a bank for settlement and a platform for transact. New era of banking called open banking, that is API banking, took birth there, which means you collaborate with multiple fintech partner, leverage on their excellence, give your platform to acquire more customers and to make the banking spread. So in this entire journey of technological advancement from book to no book situation and from closed ambience to open architecture, this transformation has happened on customer mind. Now, consumer is no longer comparing, one bank versus another bank. That era is over. He's comparing, am I getting transactional convenience? Am I getting the same experience what I get in Netflix or Amazon with any bank? And third important thing, is my data and my money secure? So banking suddenly has to demonstrate three things. I'm as agile as anyone else. I'm as trustworthy as anyone else. I'm as complicated or less complicated like anyone else. And most importantly, banks started investing on building brand, trust, and start investing on technology and start investing on people at the parallel with. So the challenges for consumers is multiple choices. And who drove this entire initiative from book to no book situation is the consumer expectation. It all started as a penetration of branches into the rural villages. Now it has become like reverse. Whatever consumer expects, every bank should be in a position to do. So when you do this demography and geography, let's go through geography. We have three different or four different India. One is Metro India, what we are interacting, where we call ourselves as more knowledgeable, more sophisticated, more people running against the time. One part of India. Second part of India, which is the emerging India, Bharat, where you have two sets of population. One who is understanding digital, getting aligned with digital. Second is not understanding digital, and one needs to go and train them. So this three, and fourth is the highest level of expectation. They expect 1 point solution. As in banking, as an industry we have to cater to four. Thanks to again government, this direct money transfer and AEPS and ABPS actually took digital transaction into the villages. So today, if you see an average transaction that's happening, close to 70 to 80% of any bank's transaction have become digital, which means the impact on economy through this digital transaction is phenomenal. See, finally, circulation of money decides the pace of growth and pace of economic growth. So if you go into that absolute economics, the velocity of money has now increased by close to 15 to 20 times in last 10 years, which means the pace in which money changes the hand, that's the opportunity that gets created, and that's the money that can be deployed for further development. That's the reality. So the velocity of money, thanks to digitization of product, thanks to digitization of process, thanks to awareness creation and the methodology, today's world has moved into that direction. So the velocity of money, the expectation of consumer, the availability of collaboration, and the supplementary services of AI, bot, and in machine learning, we continuously deploy for understanding customer, and now it has gone to the extreme end of NLP, what we call natural language processing. So I can relate and connect to a Malayali and a Marathi in a different way, but even through a common pipe has become a reality. So banks and banking is becoming more and more and more and more technology, and increasingly convenience, transaction, and security. And most importantly, without compromising, the most important function of a bank is to risk management and compliance, which is again automated. So you can have in future a bank which will have just a name and then an app maximum, and then that's it. That's it. There won't be any branches. People will still, go across, and we ourselves have seen it in our bank. We have tried it when Corona hit us. When we could move out of branches, we created a digital product called Selfie, which is a path-breaking changer. Okay. Where we used to acquire, say, X, today we are acquiring close to 10x of customers. Where we used to mobilize, say, X, we are mobilizing 8x of money. So that is the impact a digital world can create to any organization. So an organization which want to scale up, an organization which want to deliver faster, which needs to be consistent, if it can understand the segments, digitization is future, open banking is a future, open architecture is a future, and open APIs. This is a very highly technological concept, which I'm not going to leverage more on, because for a simple reason, this presentation has to somewhere end at some amicable or understandable situation. You leave it as it is, and banking has to compete with all the PPAs. That is, a bank cannot say I will ignore Google Pay. A bank cannot say I will ignore POS. A bank cannot say I will ignore a transacting fintech company. So the needs of consumers have changed. All of us have started using UPI. All of us have started getting into digital world more aggressively than earlier. So in that interest, increasingly cash dependency will go down. As the cash dependency goes down, you will have digitized currency. I'm not talking about crypto, please. Digitized currency will be a reality, which means already most of our money which is stored in your bank accounts is backed by a currency. Very soon, regulator will come out with the methodology, and then we will have a digitized currency of the same denomination, so that it can still further transfer and still further transact more. Then the dependency of cash up to certain limit of transaction can be absolutely zero. So that's going to be the reality. Digital currency is going to be the reality, backed by the same fiat syndrome. So this is what is the trajectory now. Now already banks have started working, and then in the technology side, yes, blockchain cryptography will be a reality, because parallel processing is the need when the space goes up. So I would like to, park here for 10 minutes because it's 30 minutes now. Let me take few questions and then we'll give a conclusive remark of where we are evolving.
Yes, sir, definitely. So we have certain questions from the viewers. I will, if your permission, I'll take one by one with your
Yeah,
permission.
yeah.
So the first question that we have here is, what are the preventive measures that bank can take to prevent money laundering, especially in this digital banking era?
See, we have, as I said, our banking is one of the best banking, and we have evolved in terms of UPI to technology very high. Our regulators are one of the best in the world. Our regulative preventive methodology starts from KYC. So if someone does a KYC documents correctly, okay, it starts from KYC, and then we have something called transaction monitoring at the back end. So we monitor what is the transaction that comes in, what is the transaction that goes out, what is the cash intensity. So there are multiple algorithms. That's why I said we have put AI into behind the scene. Then we also profile customer based on high risk, medium, low. So on the profiling status and on the transaction monitoring based on the KYC and based on the algorithms we built in AML, it's a daily process. In fact, hourly process. In fact, every transaction is monitored. That's the reality. Any outliers, we interact interface. If outliers couldn't be interacted interface, then there is a filing of reports. So it's a sequence of process. It's a continuous monitoring, and everything is recorded. In digital world, you leave a footprint. That's the reality. No one can say I never left a footprint. So be absolutely assured, banks are as keen as you to maintain this.
Yes, definitely, sir. Digital India that we talk about. Uh, so one question regarding crypto, that is something that you just had a discussion on. Will crypto ever be the future of currency in India?
See, uh, see, there are two theories. Okay, one says this has nothing to do with banking or anything. There's no underlying asset for crypto. Let's understand that. And actually, a currency, as I said, has to give you three things very importantly. One is it should be a unit to preserve the value, which means 100 rupees. Whether the purchasing power of 100 is 100 or not is different, but in my pocket or your pocket should give you 100. Correct? Second important thing is when you take the 100 and go and do a transaction, that transaction should be in a position to get executed. Two. And third important thing is storing unit and also freely tradable. Then you circulate in 100 rupees to someone. Today, crypto doesn't have all three. Today, crypto is an asset class for ultra HNIs and HNIs. We are mistaking it as a currency. And I don't think there is a single coin which can cater to, at this point of time, any demand supply equation of you and me, and also for the entire country or for the village. So it's a long shot. So cryptos are for those people who would like to have an asset allocation at the upper HNI when they are exhausted. When I say asset allocation, you have invested some in mutual funds, some in direct equities, some in bonds, some in gold, then some in real estate, then you bought a yacht, then you bought a plane. Still you are left with money. What to do? Then you do something with crypto. Today, it is the purchasing power is not established, transferability is not established, unit value, unit preservation is not established. So I would rather say maybe you at my age, where I'm not very old either, don't worry, might see here and there crypto happening in some part of the world. It's a long shot. Unless we create our own. There's no transparent methodology to mine it also. Nobody knows who are those miners and where it is mined and how do they arrive at the underlying asset value. So I don't think in next 10 years it will be there. Definitely.
Definitely, sir. So there is one question from our audience. What would be needed from consumers for these methods of banking to be successful?
What are the? I didn't get your question.
What would be needed from consumers for these methods of banking to be successful?
Consumers need from banking.
What
All
would
banks.
what
Hmm?
would be needed from consumers? We are asking from on the point of view from consumers. Like we
Hmm.
say that banking needs something from consumers to be successful.
Correct, correct, correct,
That
correct,
is
correct.
what they are asking.
So consumers should be very clear of three things. Uh, the credibility and integrity of the bank, they should definitely give a weightage, which directly is denoted by the capital. And today, we are in a society, thanks to our government and RBI. I think their scrutiny and their continuous monitoring ensures most of the banks which are scheduled banks, which are under their monitoring and preview, they ensure it survives, and they ensure that consumer is taken care. All consumer deposits are equally insured. This two being taken care, consumer should see then what is the return, what is the transaction, what is the services, what is the convenience I am getting for that particular deployment or transaction, and then grow with the bank. It's very, very important for one to create a credibility and credit history with the bank, because finally banking is not transaction. Banking is a lifelong journey. There are generations. So consumer should align with the bank towards it. Bank should align. So they should look at the return, what they are getting if you are a depositor. They should look at, am I getting the best of the charging platform, best of the convenience platform in terms of digital and IB. And fourth important thing, personalized service. So this four, if it's taken care, balance is taken care by the regulator, I think you should just move. And I think all of you watching should move to Equitas also. Why not? I not sell my bank because we qualify for all these things. Hmm? So I expect all of you to do selfie and help together mutually grow. There's no better deal now, actually, other than us at this point of time. Hmm.
Yes, sir, that is true.
Hmm.
So there is one question, a technical part one. As ESAF has become
Hmm.
the only small finance bank to have virtual relationship manager based on time zone, and also first small finance bank to offer its NRI customers ease of opening banking account online. What was the main motive behind such achievement?
That's a good question. I'm very happy that Pearl University has done some analysis about Equitas also, and you should also know we have now your official banking partner for cashless campus. Hmm? We have already signed up, so all of you should be part of that cashless movement, which is a digital movement of India. As I answer this, good. See, NRI, whether we like it or not, unfortunately, sun has to go around or earth has to go around. That concept is still like earth is flat, sun is round, universe is, all those theories keeps happening. All of us have different time zones. Let's take the important part. And most of our Indian who are working outside are called NRIs. If they work for 6 months and above and the classification is there, absolutely, when you sacrificed your society and family, when you go out and work, what do you expect? Three things from a bank. One is timely, attentive service. Second is credit-worthy, trustworthy relationship and transaction platform. Third important thing, and that is the most important thing, is best return for my money which I invest with you. We want to cater to all these three, and we don't have presence in multiple countries. As I said, digital world has made us one bank, one India early. Now one bank, one universe, literally, through this NRI offering. So we wanted to reach most of the NRIs who at least be aware, who are at least sensitive to relationship, who actually want to hedge and arbitrage their returns, should start banking with us. That was the fundamental platform. This give convenience, and as we go with our core philosophy and value of fair and transparent, we kept everything on digital mode, what we are and who we are. And third important thing, in much better pricing than anyone else who can offer at this point of time. So broad basing the customer base, giving them the convenience across the globe, and giving them the best return. And I think that's a good motive for any bank to go and spread their wings across, right?
That is true, sir. Sir, as we have done detailed, no, the story of Equitas, we have one more technical question from our viewers here is, please elaborate your product name EVA, which is only for women and launched in November 2020.
EVA. EVA is EVA. EVA is for you, Rachna, for you. Please go and open an EVA.
Definitely, sir.
EVA is for the progressive women. EVA is for every woman in India. EVA is for every woman to have an identity. There's no two way about it. The construct behind EVA is not only to give the convenience, not only to give the better returns. Most important feature is we want to be taking care of health needs also. If you see, there are very few propositions in the market which take care of life stage proposition. EVA is one of them. We give free medical counseling for all the women account holders, for all. Okay, and above certain variant, personal the doctor's visit is free. We give some health checkup. Then we give free wealth checkup for all the women. So it was a composite capsule to empower women towards a newer world of life. I would rather put it that way, because empowerment means it's not only for specific niche, it's open for all. So for every college student, for every housewife, for every working lady, for every microfinance borrower whom we have as a women, all deserves EVA. And it is a non-discriminatory, highly empowering, lifestyle managed product. Because you need to understand, unlike other banks, I'm just telling you a reality, we care for society more. So whenever you bank with us, most of our loans, okay, for anyone in this channel should know that it goes to the deserving society. We go and fund those people who needs to be uplifted, who can be grown along with us. And one of our core mission and vision is, which we are plowing back, is 5% of our profits every quarter goes to CSR. When government of India mandates, or our company law mandates only 2-3% in a year, every quarter. So when we make money, it goes back to the society. Where we deploy the money, we give it to the society which is in need. So one of the picture behind me is a success story of a lady. I don't know whether you could see. Her name is Lakshmi. She's from a remote village in Tamil Nadu. This is a good story which I keep reading every day in my room. She from a rural part of Tamil Nadu. She got married. She went to the husband's place, and as catastrophe could happen, many people fell ill. Her husband could not go to a job, so she came and borrowed from us some 10. So we went and gave her money, 10,000-15,000 rupees as loan. She started her own knitting unit. She repaid well. Then we said, you create a group for all the women. We will make you, we'll make you a group leader and we can fund. She went, collected 10, 12 women, came back. We again paid them. Now the story doesn't end here. Everything was going well. Pandemic hit. Okay, very badly, very, very badly. That's a wave one. Okay. Now the entire village doesn't have any opportunity. This is the situation. So this lady went around the village and said, let us all start making a mask and start selling it. She got some 200 women from that village who are there, because these are all villages less than 1,000 population. Now that mask producing village has become top 100 in India in terms of villages. This is the power of your saving, of your contribution to your society. We are only an intermediary who is finding a real need in the deserving class for us to take up there. So EVA is for, and we have 2 million. We have certain segment where we have only lend it to women. Okay, so it's not like what banking of corporates alone or SME alone. No, we touch, connect, relate to society. For us, women accounts all put together contributes close to 30 to 40% of our portfolio. So for us, empowerment and lifestyle management of women and life stage management of women is paramount importance. That's why we created.
So that is very creative and indeed very thoughtful. Definitely, my next account will be from on Equitas.
Not next, now.
Yes,
Only
sir, I will. I will. I will.
I'm happy you started pronouncing my bank's name correctly here. You first time you stumbled, but now Equitas is coming through your tongue like a flow. I'm inspired.
Sir, you made me understood what is Equitas all about. So that is why.
Thank you. Thank you.
So one question which I have here from Parul Parmar, she is has commented on Facebook. What would be a major change in banking which should be inculcated, whether it be by comparing other banking system or by seeing the Indian banking structure?
Yeah, it's very important question. Today, mass personification is happening. That's what I told you all. Emotional understanding. Today, for example, we are doing a video call. based on my facial gestures, pronunciation pattern, the flow of words, the intensity of words, you are able to make out whether he's in a good mood, bad mood, he's angry, is smiley, or is reliable, non-reliable, correct? So the next stage of banking will be understanding emotions. So mass personification in the name of persona can continue for some more days. So tomorrow when you interface to your mobile, when you shout at your boyfriend or your mother and you press very hard, that system will say, don't do the transfer now. Or you are angry, why don't you have your juice now? So that's the biggest reality that is going to happen, which means emotional recognition. Emotional recognition is one big thing. And what it will do is, it will not be only predictive analysis. It will go into multiple algorithm. It is a trend analysis. It will be futuristic, and it will also correlate after this emotion how you're going to feel or what you're going to do. So this is going to be the biggest development of AI, and this will complement the front end. So for example, assume you're walking into a branch and doing some multiple things, and in a hurried way you have bought some medicine and coming in, it will trigger a message to the branch manager. Customer is angry. Otherwise, I have to take the risk of understanding you are angry or subtle, right? So this is one thing which will happen. Second thing, what will happen is India is now housing second largest. India will become second largest senior citizen and will become largest senior citizen population in the next 10 to 15 years. So that what we have created this entire journey for millennials, mid-age, you need to extrapolate it to old age. In the sense, I'm talking about 70 and above. So a 60 bucket a senior citizen, 70 bucket senior citizen, 80 bucket senior citizen. If the average age goes up to 90 bucket senior citizen, banking is not. Even today, we are talking of outdated concepts, which is related to doorstep banking, which is somebody going, why should he go to the door? So can I integrate life stage, lifestyle, wellness, along with wealth management and a bank? So a specific niche which will come out will be more focused 5 years from now on senior citizen. Third thing is, what will happen is, you spoke about EVA, no? Watch out, very soon, once it tried and failed, Mahila Bank, there will be a bank based on empowering women as a reality. Women at the forefront, women across, because more number of women needs to step into the economy for work as well as entrepreneurship, which is a reality. Only then our GDP can start clocking 12-13%. Only men working endlessly can take us only 7-8%. Let's be very real about it. If that's going to happen, so the niche of women taking up big time, senior citizens big time, closed loop village banking. Today, you don't have a closed loop village banking, which means leveraging on mobile technology. How do I make villagers in their language, in their colloquial, in their terminology, in their terms banking? So these are the three things. This will be powered totally by AI. This will not have any face. This is the next leg of banking, which I foresee from India.
So indeed, that is actually a very need of an hour that we talk about, because nowadays I've seen in the bank itself, people are coming so much agitated towards the banking system, and they do not know what to do next. At least you get to know that they are angry, and you know what things are, what is the next step that we need to do.
Correct.
Sir, I have another set of questions with me. As in, when we are going forward, we have certain questions that are coming from our viewers.
Finish the question. There's no problem. Finish the question. No problem. It's all the same. Whether I talk alone or talk with you, it's all the same.
Okay. So our next question is, what do you think the top priorities are for payment modernization?
Payment modernization. It's a big concept by itself. What do you mean by payment? What do you mean by payment? For some, it is sending. For some, it is receiving. Correct. Earlier, 100 rupee used to be a physical form. Then used to be a paper form, that is check. Then it became into a digitized form, that is point-to-point transfer, which is called peer-to-peer. Now, next, what can be next? What best can be next? Actually, that's
AI,
the biggest.
AI, you can play a part here.
AI can absolutely play a part here, yeah. Because in this payment form, if you actually deploy AI, and if your bank AI can connect to your Flipkart or Amazon, now this is the best thing. Now you like to buy an article, or you buy what they say to buy a particle or a material or a dress, and you put it into the cart, and that AI popping up and saying, "This is an unwanted," or "This is excess. This you don't need. Keep the money." Now, is it a good solution, bad solution? And but
Definitely a good one.
is a timely solution. So next payment thing will be, there is a transaction advice people do, investment advice people do, but nobody advises when you buy or sell. Actually, are you buying in excess? Are you beating your trend? Are you within the limit? Is there a pocket within the pocket money? Are you spending, or outside the pocket money you kept it? So tomorrow's thing, every purchase, if institutions can read from the back end and at least can trigger you an impulse, because many of our purchase, you remember, 70% of what you and me buy are impulsive. That is why most of us keep buying white and black again and again, new and new. Okay, that's a reality. Mm? That's a reality. So if the next stage of payment and expense management and transaction management is going to be the spontaneous advice of backend, which it will happen, it should happen, because this will be the biggest value addition to a consumer, and this is the only way you can improve savings across the globe. Otherwise, the pace in which we exchange money, it is good, but now post pandemic, all of us have realized, all of us are having a better savings position than pre pandemic. Just shows the power of saving. So my next bet on payment or any purchase or any transaction is uh, a spontaneous advice or a trigger. Actually, do you need it or not?
So that is what I need actually, as of now.
This generation needs it, I'm sure.
Yes, sir, that's true. Sir, our next question. To compete in today's competitive landscape, bank need to modernize their older technology to be agile and data centric. At what stage are they in this modernization process to your experience?
See, banking, as I said, has become a technology led institution. Okay. What is the biggest disadvantage and advantage of technology led? And first, let us talk about advantage. You're on time, you are delivering what consumer wants, and you are benchmarking against other peers and improvising yours. This is one side of advantages. The disadvantage is technology by itself gets obsolete every 2, 3, 4, 5 years. So, which means you need to be constantly on toes. By the time you master A plus would have come in, and you're closing to A double plus would have come in, and somebody would have bypassed A plus, double plus, directly would have entered A triple plus. Now you have to meet up there. So, the conventional model of banking balance sheet used to be revenue minus expense equal to profit. Okay, that will undergo a significant change. Since you guys are management people, it will go to user usage syndrome. How many user I get, how many usage I create, and the byproduct of that revenue over a period of time. So which means, like they say, burn and earn. Most of the industries will do that, because there's no two way about it. You keep on adding capacity, you keep on getting consumer. Over a period of time, consumer starts consuming, then later you will start realizing revenue. That's the model. If you see Silicon Valley model, user usage syndrome, so that's going to be the real balance sheet and real challenge. Because as a bank, remember, as you rightly said, we are used to certain traditional mindsets. We have to catch up with the new generation fintech. So there is a path or tunnel through which we are passing through as an industry. But remember, we are the oldest industry, and we are the largest ones who have done the best R&D in this, and we have survived 2, 3 centuries. Just like that, by doing innovation and improvisation. So we have the ability now to become a techno front and agile. We need to get the composite structure to be flatter. So which means we need to delayer our structure. We need to get a new gen workforce. Of course, yes, we need to create an aspiration within this industry to be the best among the fintech players going forward. So it's a big journey which we are going to face. And most importantly, on a balance sheet side, revenue minus expense will be a history, and it's going to be user usage and unit transactional value that will going to drive the balance sheet.
That's right, sir. So we have one question from Jackson D'Souza, who is has joined us from Facebook. He says that as pandemic has badly hit us all, what unique steps Equitas has taken to serve its customers? How different it's from other competitors?
See, how is it from other competitors is more of academic interest, correct? How I live, how I prosper is the most important thing. We relied on first digital side of the business. We did two things: developed our own core product called Selfie, and we penetrated harder into the society, deeper into the society. We use social media and search engine optimization to get in. Parallelly, we did fintech alignment through API banking to get more consumers in. This is from the acquisition point, which helped us to grow 10x, as I said, and our values went by 5-6x. Then to get the engagement piece right, we created something called lead management platform called Empower, where based on propensity, based on, as I said, AI, all those things put into perspective, we understood consumer and we made sure our VRMs, virtual RMs, where we have a unique team of virtual RMs for NR and domestic, along with the physical RM to start interacting on a sharper point on educating consumers and also giving them the opportunity side of the business. So customer engagement is taken care of. On the service side, we deployed bots for service for important or rather lower decision making and repetitive tasks. And fourth important thing, we created something called virtual banking, where 60% of the services people can log in like this and talk and then interact and close out. So these are the four big initiatives which we could do in 12 years. But thanks to pandemic, all these substantial changes, what we have done for customer acquisition, engagement, service, and most importantly, cross-sell, it would have taken 5-6 years without the pandemic. So actually, Corona worked positively for the industry and digital world. And at the back end, we have deployed RPS, which means automated robots are reality now. They are doing repetitive and non-repetitive functions also now. Earlier, it used to be only repetitive. Now we are getting into non-repetitive. So process efficiency has gone up, yielding two things. One is enhanced productivity, and most importantly, efficiency in terms of cost optimization. We could derive out of this pandemic.
Yes, sir. So one question from Dr. Ayushi Sharma. She is one of our faculty. She says
Mhm.
that is there any digital hierarchy followed by bank due to this transformation?
Digital hierarchy.
Yeah.
I'm not getting it. Is it on the organization side or consumer side?
So organization side.
There's no way. I think in today's world, every branch needs to have which we will try to make it in coming years. Every branch should become an experience center, and in every experience center, we need to have a digital corner. And we created exclusive digital, the team we already had. We slightly more expanded, and most important thing is all 4,000 people in branch banking are digital, enabled, empowered, and knowledgeable people we have. So I think that's the biggest hierarchy we have. Well educated, well groomed, and very knowledgeable workforce. So I think that's one of the main reason why we could implement all four in a very easier manner. And we did conduct a lot of training. We did spend a lot of hours on learning and development of our workforce. Now they are in turn doing it to consumers also. So we don't have a hierarchy wise. It's an open platform. See, in digital world, you cannot have hierarchy. It's an open platform. If I have it, I have to give it to you. That's it. Hmm?
Yes. So last two questions. One question that we have is country like ours, where majority of people living in rural areas are not much literate, and will find it difficult to use digital banking facilities. What will be the strategy of banking industry for providing literacy among these segments?
See, as I said, in Bharat side, there are two sides of Bharat. One is already digitally aligned Bharat, thanks to our, see, banking leverages on what? On telecommunications platform, correct? Thanks to Jio, Airtel, Vodafone, they have done very deep-rooted penetration. So a person whose ability to read English um, is now not a constraint for anyone to do a banking, because most of the banks and most of us are into multilingual mode, which means you are already in 8-10 languages. First part of it. Second part of it, metro, most of us know how to use smartphone, most of us have. Urban, most of us know how to use, 50-60% of the person have, so no issue. Semi-urban and rural, you'll be surprised, 50% can, already using it. Balance 50%, out of that 50% actually know how to use, they can't afford to it. And there are set of 50% who are not able to reach. To supplement and complement that only, we have employed something called business correspondent model at every center. So today, for example, any AEPS or ABPS, people go and put their thumb impression and get the money, whatever is direct money transfer, multiple government schemes. It's happening on a continuous basis. But you will still have, whether we like it or not, 20% of the population will be left out, even say next 2-3 years from now. It needs to have a constant awareness and constant, reach within this, and there needs to be education series. We have just started our series towards educating consumers what we have inside. Now I need to take it outside to all the prospects, where we go and educate them and elevate them towards the digital mode. So it's a long journey. Every institution is doing it, but it will take some time to reach at least 25-30% of the population. But if we get 60-70% of the population into the digital world, 100%, I think that's a significant achievement to start with. This 30% education, learning, development through remote mode, through physical mode, through agency mode is on, but it will take some time.
Yes, sir. Digitalization is something that will take some time. So one very interesting question from one of our students is, what are the opportunities that you are offering to the students?
Students, send your CV to Nipa Shah. She heads Gujarat. So best of you. Will continuously, we are looking for people. You are good talent. See, one important thing is, at these sort of times, people should be open-minded to go and understand, develop, self-develop, and get into a job. And getting into a job, there is no big job, small job. All jobs are same. So someone will say, I don't want a field job. Someone will say, I want a desk job. There's nothing of that sort of late. All jobs are same. Finally, at the front end, it's only our relationship, personality, and knowledge counts. So if you are knowledgeable, if you have a good personality, if you have to develop the skill, we'll still develop the skill. We are open. Please send the CV to Nipa ma'am. She's the right person.
Definitely, sir. Looking forward to that. We have a lot of talent in our institute, in our university, who would be interested in working with you.
I'm talking. I believe I'm talking to one.
Thank you so much, sir. Sir, I would want to express my appreciation for your inspirational webinar today, and your years of research, your depth of understanding of the market, and your ability to present the subject in such an interesting way produced one of the most memorable evening in our students' mind. And the subject is interesting, and we plan to learn more from you.
Thank you.
Thank you, Mr. Murli, for enlightening and entertaining webinar on future of banking and digital impact. We appreciate having this mysterious area clarified. Thank you so much, sir.
Thank you all. Thank you for the opportunity. We'll hope to meet you all soon. Take care, wear mask, maintain social distance, do well in life.
Yes, sir.
God bless you all.
Thank you, sir.